We're back, baby. $98,769. That's where we sit heading into the weekend of August 7th, 2026. Down 1.23% from the 100,000 we started with. $3 in cash at the moment. And hold on to that $3 because by the end of this, it turns into the biggest problem in this whole portfolio. Not the red, not the drones, not the one that's down 24%. That one. Here's the thing about this week. About the last 2 weeks, really. It's the kind of recovery story that doesn't get written about until after it happens. 2 weeks ago, this portfolio was sitting at $87,686, down 12.3%. That was the low. That was the moment where, if this were real money belonging to a real nervous person, the temptation to hit sell and walk away would have been overwhelming. We didn't, and the portfolio climbed $11,000 back in 2 weeks. We're now down just 1.2% from the start. That is not a disaster. That is barely a scratch. But one of these 8 positions did something this week that changed how I'm thinking about the next buy, and it isn't either of the two that went up 27%. Let's talk about what actually moved the needle, because this recovery wasn't built on hope. It was built on the drone trade. AVAV, AeroVironment, was the single biggest winner on the week, up 27.4%. We're holding 50 shares with a cost basis of $185.92, and the stock closed at $186.73. So on a percentage of portfolio basis, AVAV's weekly move was spectacular. On a dollar of profit basis, the position is up about $40 overall, which is the polite way of saying we don't have enough shares. AeroVironment is the kind of company that reminds you why position sizing matters. When military drone spending accelerates and the company that makes the Switchblade and the Puma catches a bid, you want to be holding more than 50 shares. Lesson noted. We'll revisit that. UMAC had a nearly identical weekly move, up 27.3% on the week. 800 shares, average cost of $24.47, now trading at $26.11. That puts the overall P&L at positive 6.7%. The 300 shares we added at $19.10 on June 30th are looking particularly good right now. UMAC is drone adjacent, it has a stake in the JFB XTEND merger ecosystem, and it carries some political proximity that tends to matter in a defense spending environment. It's not a clean, simple thesis. It's a messy, tangled, interesting one. Those are sometimes the best kind. Most of our drones are up, and we're hoping we'll climb higher. Then there's JFB. Up 23.1% on the week, which sounds incredible until you remember that JFB is still down 17.2% overall. We're holding 6,588 shares at an average cost of $5.40, and the stock closed at $4.47. That is still a significant hole. We're still holding on for the merger with XTEND, which the S4 was filed June 17th. The deal is targeting a Q3 2026 close, with XTEND landing on the NYSE as XTND. Until that close happens, or until it doesn't, JFB is going to be volatile. We added 1,500 shares at $4.89 in late June, added another 88 shares at $4.67 the week after that. This is a conviction position. The Pentagon drone spending narrative is real. The catalyst is specific and time-stamped. The thesis is either going to pay off or it's going to be an expensive lesson in merger arbitrage. We're watching it closely. Here's the one I mentioned. The best performing position in this entire portfolio is the one I own the least of, and that's starting to look like a mistake. SentinelOne, up 16.3% on the week. 25 shares at a cost basis of $15.19, now trading at $21.40. That's a 40.9% overall gain on the position. S was bought as an asymmetric cybersecurity bet, AI native security in a world where the attack surface grows every quarter. It has quietly become one of the best performing positions in this portfolio. 25 shares still isn't a lot, but 40.9% in the green on any position feels good. Berkshire Hathaway Class B is doing what it does. 30 shares at $488.13, now at $521.80, up 6.9% overall, up another 2.4% this week. Greg Abel's era is off to a quiet, competent start, which is exactly what Berkshire shareholders would want. This is the portfolio's ballast. It doesn't give you 27% weeks, but it also doesn't give you negative 17% positions. It just sits there and appreciates like a very boring, very reliable machine. Although people questioning what Able is doing still sitting on cash, curious when is the right time to leverage that, it's obviously not now. Quick reset because this next one is the part that actually matters. 2 weeks ago, this thing was down 12% and we did nothing. No selling, no averaging down, no new money. This next position is the reason that was either disciplined or just stubborn, and honestly I still don't know which. Now the one that's been hurting. RAP finally stopped bleeding, and that deserves to be said plainly. Up 6.2% this week. Still down 24% overall. 406 shares at a cost basis of $246, now at $187. Yep, this one still hurts. But the technology is real. RAP Shield, the exclusive US and NATO rights to Fresnel Imaging's physics-based sensing platform. Counter-drone, counter-UAS. In a world where AVAV and UMAC and JFB are rallying because drone warfare is accelerating, the thing that detects and stops drones should, theoretically, be in demand too. The 6.2% bounce this week suggests the market might be starting to connect those dots. We need more weeks like this one from RAP. Now for the income side, which took the opposite direction this week, and honestly, fine. Realty income was down 2.6% on the week, 215 shares at a cost basis of $60.84, now at $62.51. Still up 2.7% overall. O is not a growth stock, but it pays a monthly dividend, and it will continue paying a monthly dividend, and that is the entire point of owning it. A 2.6% weekly dip in a position like this is not a problem. It is noise. Coca-Cola was down 1.6% on the week, 100 shares at a cost of $79.48, now at $87.05. Still up 9.5% overall and sitting on 60-plus consecutive years of dividend growth. KO giving back 1.5% in a week where risk on defense names are ripping is the most predictable thing that could happen. Money rotates. That's normal. KO will be there when the rotation comes back. So where does that leave us heading into next week? The three names we're watching most closely, the casino as Warren Buffett might point out, are JFB, UMAC, and RAP. JFB because the merger timeline is tightening and every week brings us closer to a binary outcome. UMAC because it's finally in the green and we want to understand whether this is sustainable momentum or a mean reversion trade that's about to exhaust itself. And RAP because 6.2% is a start, not a finish, and we need to see whether that move has legs or whether it was just a one-week exhale in a name that's been beaten down badly. The broader picture is this. The portfolio was built with a barbell structure. On one end, boring and stable, KO, O, BRKB. On the other end, high-conviction thematic bets, drones, cybersecurity, counter-UAS. The boring end is doing what it's supposed to do. The thematic end nearly blew the whole experiment up, and then in 2 weeks staged one of the cleaner recoveries you'll see. We went from down 12.3% to down 1.2% without adding new capital, without panic selling the losers, and without chasing anything new. That is the experiment working as designed. So, that $3. Here's the problem I promised you at the top. Every position I'd want to add to right now is one I already own. RAP sitting 24% below my cost basis, JFB 17% below. Those are exactly the prices I said I wanted to buy at, and I'm standing here with $3. That's not a portfolio problem. That's a planning problem, and it's on me. We're not back to even yet. $98,769 is not $100,000. But the trajectory is right. The thesis on the drone names is still intact. The income names are collecting dividends quietly in the background. SentinelOne keeps printing, and Berkshire keeps doing Berkshire things. If you want to run the same experiment on your end, track the same names, build a parallel portfolio, see how your decisions would have differed, the tools are out there. Paper, trade it. See what you would have done at the 87,000 low. That's where strategy gets tested. Next week we'll have the numbers, we'll have the update on wherever JFB and the XTEND deal stands, and if RAP can string together a second week of green, we'll talk about whether the counter-drone thesis is actually getting its moment. $3 in cash, 100% conviction, dumb money, smart moves, the 100K experiment continues.